top story this afternoon, the Bank of Korea has lifted its growth outlook for the Korean economy for this year, making an upward revision for the first time in 3 years. The central bank also froze its key rate and said it'll maintain its stance of monetary policy accommodation for now. We'll begin with our economics correspondent, Kim Min-ji.
The Bank of Korea on Thursday said it expects the local economy to expand 2.6% this year. That's up 0.1 percentage point from its previous outlook of 2.5% in January. It marks the first upward revision in exactly 3 years.
Although spending has been weak, the economic expansion since the fourth quarter of last year has been greater thanks to increased exports and investment. Although there may be changes on the global trade front and geopolitical risks, Korea is expected to maintain a modest recovery.
With that, the Bank of Korea said the current conditions offer less of a reason to lower its key interest rate. In a widely expected decision, the central bank kept the rate steady at a record low of 1.25%, unchanged since last June. It's been caught in a sticky situation, unable to either opt for a hike or make a cut. For starters, the country is facing sky-high household debt of over $1.3 trillion, so a lower rate could spur further borrowing. On the other hand, uncertainties from China's apparent economic retaliation over the deployment of a U.S. missile defense system and increased protectionist sentiment from the U.S. could weigh on the Korean economy going forward, making it difficult to accommodate a rate hike. The central bank is also facing another dilemma due to the narrowing rate gap between Korea and the U.S. after the Federal Reserve raised its key rate by 25 basis points to a range of 0.75 to 1% last month.
The U.S. may raise rates 2 or 3 more times this year, but the BOK is in an awkward position because of Korea's household debt and slowing domestic consumption. The central bank may have to raise rates next year if the U.S. overtakes Korea, as it might trigger a capital outflow.
Still, the Bank of Korea has emphasized that while U.S. action is an important factor, it will not mechanically raise rates just because the Fed does. For now, it says it will maintain its current policy of monetary easing to support growth as the inflationary pressures are not that pronounced. Kim Min-ji, Arirang News.